So again, we've got retail sales here this morning, which will be important to this market. It'll be important to the stock market, which has been, ripping higher off the prospect that, rate cuts are coming, and the companies that are in the S&P 500 are just, there's just a couple companies in here that are just killing it. Specifically in like the NASDAQ. The NASDAQ's just been a monster performer, and we can click through some of the companies and why. NVIDIA is a huge holding in the NASDAQ. Apple is a huge holding in the NASDAQ. Broadcom, AVGO, is a huge holding in the NASDAQ. And look at this beast, the Broadcom rally, which is another semiconductor company. I mean, you've got NVIDIA doing its thing. Well, here comes Broadcom. So you got two huge semiconductor companies dragging the NASDAQ higher. And I'm not going to lie, I would be lying if I said that this doesn't make me a little bit nervous about this rally. It's being led, it's all tech and semiconductors, which is that a bad thing? No, I mean, those things are in high demand right now as people are getting all hyped up about AI. But I just keep coming back to the problem that I see with this market. Look at the Russell. This is small businesses of America are flat since 2020, right? There's been no gains on the Russell since 2020, late 2020, but still, my point was showing you that is that here you go, you got a couple companies, not a couple, but a sector or two, semis and technology, that are just flying high, and everything else is just not particularly impressive. It does make me a little bit nervous about the rally. Again, I would love to see, I was really, really bullish on the stock market going into the end of the year. Now, again, I shoulda, coulda, woulda just held the whole way through. I did buy back in, and I have some positioning as of the April pullback. So I haven't missed this rally. I was long over here until about this area, and then I was long big time here until about recently, where I cut off my positions. So I've caught a good chunk of this rally. But what makes me so nervous about this is that I liked this portion of the rally because rates were falling, yields were dropping, and it looked like we were finally going to get, rate cuts in tandem with a strong labor market. During this time, you had the Russell sweet spot, and I was pumped about it. I was really long the Russell. I was long the S&P 500. I was excited for the majority of companies, and that's when I love to be buying stocks, is when most companies look attractive. What makes me so nervous right now is that only a small portion of the stock market looks really strong. Tech and semiconductors, right? The chip making companies. So without getting too far down that rabbit hole this morning, we do have retail sales, but I just want to reiterate that I am not adding or buying aggressively on the NASDAQ at this time. I am looking for pullbacks. I'm looking for a broadening rally, which I think could happen, but you need to see labor data stay relatively strong with inflation come down. That's what I need to see in order to be really bullish the stock market. So we may have some hiccups along the way. We may see some pullbacks, in which case I can be a buyer. I can add to my positioning. But for now, when it comes to the stock market, I am on the sidelines and cautiously watching. The dollar index continues to hold its gains here above resistance here at the 105.2 level. As we go into these retail sales numbers, this is going to be very important to the dollar index. The dollar index, of course, again, when it comes to retail sales, strong retail sales, a strong consumer would be bullish for the stock for the stock market, but also for the dollar, right? Remember that a strong consumer means more spending. More spending means more tax revenue, more activity in an economy, more, activity in an economy is very good. So the point is here, if you're watching retail sales, we want to see a lot of strength in the retail sales number if you are bullish on the dollar, or really, I think, arguably bullish on the stock market. The stock market might not love it in the short term if you get strong retail sales, because they might say, oh, that's inflationary. But I think strong retail sales are a bullish thing for the stock market, even if it causes a short-term dip. So we will see. And again, we're coming into that data here in just about 5 minutes. We're going to continue to take a look at some more charts as we get closer to the release. So again, the dollar index from a technical perspective looks healthy. Let's see if you get cool retail sales and price comes down, how does it react at this 105.2 level? And if we get strong retail sales data here this morning, can we break through and can, the day traders take it back up to 106.4? That's the question here, I think, you have for the dollar. So if you are now, now that we've talked about the daily chart, if you're looking at the dollar index on a 4-hour chart, you've kind of got this level of support. We'll go ahead and make this a 4-hour demand zone. So you have this this kind of 4-hour chart level here. It's a wide zone, but we're sitting right on this level. And the question is, are you going to get a break through the highs?
Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
Or are you going to get a break through these lows? And again, I don't know because I don't try and predict what economic data is going to come out as. But what I do pay attention to is, if you get strong retail sales, can the dollar continue to hold its gains, bounce and rally? And if it gets poor data and we see the dollar sell off, can it hold those downside gains for the bears, right? If you get something like this, really strong breakout for the dollar, my opinion, if it can close above this level of resistance, my opinion would be probably continues to drift higher. You could probably look for pullbacks. Now, of course, do what you want to do, trade your own strategy. I'm not here to tell you what to do with your trading account. This is what I am thinking and what I'm doing in the markets. As always with these live streams, this is not financial advice. Please trade carefully. People lose a lot of money in this every single day. And over the years, I've watched so many traders come and go to these shows. So please understand, most people lose money in this stuff. It's really hard. And don't take anything I'm saying as what you should do. I'm sharing my thoughts. Okay, so the other thing with the dollar here is, what about if you get a bearish candle? What about if you get really poor retail sales here this morning? Again, I don't predict this stuff. I don't know what's going to happen with retail sales. But what if you get something like this? Yet in that case, the dollar may find its way back down to the bottom of this range this week. May not be right away, but if you get a big red candle here that kind of disappoints on retail sales, the dollar could trend back down to the lower levels here. So I think for the dollar index, you have some levels here in terms of price action that I think price would, if it's going to start trending one way or the other, some targets, some magnet levels, if you will. That 106.4 level on the 4-hour kind of resistance level here, and on the 4-hour support level around the 104.2. So I'm watching for breakouts here. We'll come back to the dollar index and talk about that. We are just about 2 minutes out from the data. Let's take a look at gold here on the 4-hour chart. Gold, really choppy recently, has not made much of a directional move either ways. You've got a big drop off here, but we are very range bound right now. Same kind of thesis for the gold market. If you get a strong dollar today, gold may break back down to these lows. And the question for the bears would be, can you actually break the 2290 level? That is the question for the bears. And for the bulls, if you get, a nice retail sales number that comes in real light, right? A miss on retail sales would likely cause gold to get a little bit excited. And the question would be, can you break through that 2335 level? So range bound markets to go into today, which is fine. I think we just look for signals of a break one way or the other. So that's what I'll be looking for on gold, the dollar, the S&P, the NASDAQ. All right, retail sales coming out here. Seeing a little bit of a push here on gold. Seeing a push on the NASDAQ. Dollar index is lower. Dow Jones and S&P are slightly higher. Let's see what the number is. All right, and there's our retail sales number. Came in lighter than anticipated. You had a number here that was forecasted to be 0.2% on a month-over-month basis, so 0.2% growth in the retail sales for May. Instead, we got a 0.1%, so a slight miss on the retail sales. Retail sales ex autos, which is an interesting one as well, we're expected to grow by 0.2%, and extracting the automobiles out of the picture, you had a minus 0.1% growth. So little lighter print than anticipated. And let's go back and talk a little bit about what we discussed earlier in how we thought this might impact the charts. Let's switch over to our full screen here. And here's the dollar index. Again, dollar index is moving lower, but we're back to exactly what we were speaking about moments ago. Now that we're back to this level of support, how does the market react? You've got the dollar index coming lower, but can it actually break out? Do you get a candle that closes like this, showing some bearish strength? Or does this bounce back right away and not really make a follow-through move? That's the question here as we go into the next or the remaining trading day here. So we're going to watch price action to see if you do in fact get a strong enough break underneath this 105.30 level, let's call it. Same thing for gold. We talked about gold earlier, but the question now is, can gold actually get enough momentum here to break through some levels of resistance? If you're looking at the hourly chart, you've got 23.25, let's call it. Can price get up there? And more importantly, can it actually break that level and start getting us some directional bias on gold? Gold has been very much, back and forth. We need to see, in my opinion, some some decisiveness one way or the other. S&P 500, again, if you take a look at this chart, you've got more flag looking patterns. It's been day in, day out, same setups over and over on the S&P 500. And I admittedly wish I had caught more of them. But again, ranged here at the upper and lower levels of this 1 hour chart. The question is, for the bulls here today, can you see a break? Whoops, I messed that up. Hold on. Can you see a break above or below this level? So again, range bound on S&P. What about the dollar yen? This is interesting. You're back up here, as you mentioned, Ivan. They've been looking for progress. They've been looking for some sign of positive inflation and economic growth. And yet here we are. I feel like we've done this same story 37,000 million times, Ivan. We're back to, here's this big level of resistance overhead, 158. And excuse me, but every single time this happens, it pops way through that level and just runs again. Is that going to happen here? I mean, we're at 158. Yes, you're seeing some signs of rejection, but I just have a hard time, trying to call a top here on this dollar yen thing. It just keeps going.
Yeah, I don't think I don't think it has the legs, to be honest. You need more dollar strength. And what you have seen, I've been drawing lately, not lately, because it has just been a bit of a wild ride. Been a lot of ups and downs. FOMC, in my view, didn't give us a very clear direction. There seems to be some dollar strength coming in. But I think it's more of, offsetting summer. Also, we're going into summer, finding something more safe, slightly. Not a big move. Just to be safe, because what has happened to, is it ATR? So average daily volatility, like it has slowed down, like on the yen pairs as well, on dollar pairs. Like I feel like we're not moving anywhere. So yeah, the volatility has just reduced. And then Royal says, why do I sound like Kermit? Because I'm sick.
Well, you still sound great to me, Ivan, but that I totally agree on the volatility stuff. The VIX has been, look at this VIX. This is, I remember pre-2020 in the currency world, I was watching currencies a lot during that time. And pre-2020, it was kind of like it is today. I remember in 2018, 2019, volatility was very low, and at the time people were saying the same thing. Hey, remember 2010, remember in 2009 when NFP would move the markets by 150 pips, and nowadays you get, like, you're lucky if you get 50. And that, I remember that being the case. And traders who are watching the currency market as well as the futures market and in commodities and indices or stocks, volatility is interesting because when you get these very low prints, there's not a whole lot of move that usually happens. And then we saw 2020, volatility came back. We saw it, kind of ramp up again in 2021, 2022. And now we've just trickled back down to a period of very low volatility. And that carries over into the currency market. As I was mentioning earlier with like sectors that are performing well or sectors that are performing weak, if you take a look at like XLE in the stock world, at least, that's, an area that's been weak. You've had oil kind of profits for companies performing poorly, but I'm curious, what your thoughts are on crude itself. Again, it seems like it may have put in a low around 72.8. What do you think? What do you think happens with oil?
No, and now there is an article I should know on the top of my head if somebody can find that later, but I think there was an article about Saudi saying that they're going to continue cutting for the rest of the year. I think that was just a discussion, but I don't know if that was actually
cutting supply.
Yeah. Yeah. That would send this one a bit higher. And then there's been a lot of talks about the deal between Saudi Arabia and America about the dollar purchase.
Oh, yeah, the petrodollar thing.
Yeah. I'm like, okay. It doesn't really bother me. BRICS doesn't bother me. So in terms of Saudi, in terms of oil, I think that this one is going to have a bit of a harder time going higher. So what's the drivers? Currently, we have the production in Saudi, maybe going lower. Then that would increase the price. But on the other side, you have not increasing inflation. You have a bit high inflation, but not enough inflation. And especially China needs to get going to get oil to go higher. So for me, I think overall there is pluses and minuses, but after all, I think it's going to be a bearish going forward for the rest of the year, because there is not enough activity in the major economies that uses oil.
Yeah, and that's it's so interesting to me too with an election year here when it comes to oil. You have some forces at play. As you mentioned, Saudi Arabia has the desire to increase the sale price of oil because, of course, if they can raise the price of oil, they make more money. But then I saw, this is kind of interesting too, side note on that is they want to sell it higher, but they don't want to price it too high because they know that if they price oil too high, then it will hurt the economies of the world and the demand for oil will actually weaken. So there's like this sweet spot, and I think that their sweet spot is like 80 to 90 range. So Saudi Arabia has an interest in keeping oil somewhere in this area because they can make kind of their max profit, which makes sense for them. At the same time, you have elections in the UK, you have elections in the US, you have elections this year, and the US has a vested interest. If you're Joe Biden, you want the price of oil to be lower. So you have these two forces. Why would you want it to be lower? Well, because if you're trying to collect votes, and I'm not saying anything bad about Joe Biden or Donald Trump or anybody, if any one of us was the president, you would want to do this too. You would want to keep fuel costs at the gas pump low enough that it doesn't hurt people's opinion of the current administration. Because if everybody, there's one way to really make people mad across the whole world, and that's high oil prices. People hate when they have to go pay a bunch of money at the gas station because it just feels like, hey, I was paying, a lot less for this a month ago. So anyways, there's two forces there, and it makes for a very interesting year with again, Saudi Arabia wants prices up and administrations want prices down. So we'll have to see what I think the big one is to continue watching oil production in the U.S. as well to see how that affects it.
But also, do you have like a hurricane season now? So you have to reduce production probably in the Mexican Gulf. Slash down there. But for my screen, I've typed out supply and demand, if possible, to read. That like oil market is the most supply and demand driven market that I know that we can trade and then also risk.
We did have a very nice trade yesterday on Nasdaq. It was going up very nice because we had a smaller breakout that the market. I see the breakout on your screen there. That the market broke out, then we jumped in around that level. So at the moment, yes, there. So at the moment, it seems like it's struggling to go even higher. But I can say it's actually overbought. So a reversal, I think it might happen every time, anytime. I thought maybe retail sales, it was going to be maybe a little bit positive. Maybe we're going to see some reversals, but it seems like things are now no longer in the favor of the dollar. So it's also good because that shows that inflation is slowly going down.
Sure. Yeah, that's a good point too. I think that I was saying this earlier, that retail sales kind of has a weird effect on stocks, because if you have strong retail sales, that would be good for company earnings, but not good for inflation. And if you have weak retail sales, that would be not good for company earnings, but good for inflation. So it's kind of like a back and forth, give and take, if you will. But as you mentioned, the NASDAQ is currently, back up here, kind of teetering between this 19,000, 20,000 really, 20,000 upper limit and the 19,900 level. We'll see if it wants to break one way or the other. It is, like you mentioned, in my view, also pretty dang overbought here in terms of due for a bit of a pullback. It's not something I'm looking to short, but for me personally, I would need a little bit more of a pullback before I can get involved. Even if we drew like a fib here from this level here, that 61.8% retracement looks pretty interesting. But again, this market just wants to keep going higher, so it's kind of hard to fight the trend. And trying to wait has been, keeping, it takes a lot of patience, that's for sure. At the same time, you've got the dollar index. You mentioned some weakness in the dollar. What are your thoughts here? And if you'd like to share your screen, you can. If you're not sharing it today, no worries.
Sorry, I forgot.
All good.
Yeah, I forgot to share. Let me share it very quick. I thought I was sharing. So, yeah, on dollar index, I was just trying to see what's really happening with the dollar after retail sales. It doesn't really seem like it's too much, because the dollar seems to be quite strong. We understand that they might cut the rates, but I think they might cut once. So that might also not be a good thing. That's why we see dollar still continue to go up. On my structure here, we had actually a resistant area, which seems like the market is trying to break out. And already we see a breakout. If it retests here, we might see a continuation of that uptrend. But slowly, maybe we'll see a reversal, because cutting the rate is also a good thing. But it seems like it's not really enough. That's why we see a nice reversal going higher. Maybe maybe later on, we might see a nice reversal. But at the moment, on my daily time frame, you can see that it's actually a very nice bullish structure. So we will see what will happen. This is what I have at the moment. So we might have something like that. It's possible.
Yeah.
But since they're going to cut the rates, or since the inflation is going to go down, maybe they will change their tone next time on the next maybe Fed meeting.
Sure. Yeah. And I think that if you take a look at the dollar index itself, it's very interesting on the daily chart that you have this breakout here that occurred recently. But it's a breakout that had a long wick on the top. It looks like it wants to go back and retest this area. The question will then be, can it hold that level, or do we break back into the consolidation level? I think that if you if you get a break through these highs, the dollar likely is going to push up to that 106.4 level. And if you break back underneath this supportive area, we may just be back in range bound territory. So we will have to see what the dollar index does from here. Gold, of course, seeing a little bit of a pop here this morning off of the cooler than expected retail sales numbers. What are your thoughts on gold here today, Kenzo?
I think gold, where it is, it's been struggling at this level at the moment. On a bigger time frame, we can say we are a little bit lower at the moment. So I think it might be a good time for gold maybe to bounce back again, because we're coming from this higher level here. Maybe we might have a bounce back, and I don't really know why, because we have like tensions or geopolitics all over the world. I thought maybe it was going to recover very quick, but it seems like it's still struggling. But let's hope that maybe we are going to see maybe another push to the upside. I think that might actually happen, especially when we are from this support area. I think this level here might be quite similar to this level, around that level. I think maybe that might repeat itself, but we can easily see that this horizontal structure there, it's what hold this market for quite longer. We saw the market reversing around this level, so maybe we might see another reversal around this level. So with the geopoliticals all over Russia and Ukraine and the other ones, I think this might also push the market to go up again, but it's up to the market. We will see what will happen.
Yeah, for sure. And we will have to see if there's any sort of spike in geopolitics. That usually is a positive thing for gold, oddly enough, but it does make sense. People kind of flock into the safe haven. I like that level of support you have on the daily chart. I've got the same one drawn kind of just to see where this is. I currently have a long position on gold. If we break through those lows, I'm out of the trade. And if we continue to push higher, then that would be great. But we've been very range bound here recently, not really making too much of a, as you mentioned, it is kind of struggling at where it currently sits. We'll see if this level of support can hold, or if we get another kind of lower high and we break through lows. In that case, like I said, I will be stopping out of this position.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button, or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.